Have you ever wondered what happens when a country produces a ton of oil, but its biggest customer suddenly slows down buying? Well, we're seeing that play out right now with Iran, and the numbers are pretty staggering. Let's dive into it. The amount of Iranian crude oil just sitting on tankers out at sea has ballooned to the highest level we've seen in 2.5 years. We're talking about a massive 50 to million barrels of oil in what is called floating storage. To put that in perspective, that's almost double the volume from just a month ago. Back in January, it was only around 5 to 10 million barrels. So, what's causing this huge pile-up? The main reason is a slowdown in demand from China, Iran's #1 oil customer. Even though Iran is still exporting a lot of oil, the pace at which China is buying has eased up. This isn't totally unexpected. Chinese refiners have been finding cheaper alternatives from other places, like Russia. And they've also been doing some maintenance on their facilities, which temporarily reduces their need for crude. So, where is all this oil? According to data from the shipping intelligence firm CPLR, about half of these 52 million barrels are floating in tankers off the coast of Malaysia. This area is a common spot for ship-to-ship transfers, where oil is moved from one vessel to another, often to obscure its origin before it heads to its final destination, which is frequently China. This situation creates a bit of a balancing act for Iran. They need to keep their production and exports high to support their economy, especially since they face international sanctions. But when your main buyer hits the brakes, even slightly, you end up with this floating surplus. It's a classic case of supply and demand dynamics playing out on a global scale. What does this mean for the oil market? Well, this floating inventory acts as a kind of buffer. If there's a sudden disruption in supply somewhere else, this oil could quickly come onto the market. On the other hand, if it stays in storage, it keeps that supply off the market for now, which could support prices. It also highlights how interconnected the global energy market is. A decision made by refiners in China can have a ripple effect, causing tankers to pile up thousands of miles away. It's a fascinating situation to watch, showing the complex dance between geopolitics, economics, and global trade. We'll be keeping a close eye on whether China's demand picks back up and how long this floating oil stockpile continues to grow. Thanks for watching. If you found this interesting, don't forget to like this video and subscribe to our channel for more insights into the world of energy and finance. See you in the next one.